late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So we're gonna jump into the charts. I want to do an update, kind of just a macro update. You know, things are still experiencing that relief. We're breaking out past highs when it comes to the SPY and the NASDAQ. We've also seen Bitcoin doing very well. So we're gonna just kind of update everything here. I will talk about a few new positions that I have opened. I've shared those in my Telegram group as well, but we're going to start here. This is Macro Monday, so we're going to pay attention to kind of basically the major indexes that I do follow. We'll take a look briefly at a few stocks, just ones that I have open positions on. So we take a look at the dollar here. Still experiencing more weakness. This is that bear flag structure. We've got all our moving averages kind of angled down here. So we're still looking like probable bearish price action for the dollar right now, which is ideal for our risk on assets. When we look at things on a higher time frame here, this is where we start to see this prior trend line that we had kind of just we've identified this trend line prior, dating all the way back here till 2008. We kind of deviated below it here, but acted as support. I think that is likely our probable level that we're headed to. So looking at about a 95 here for the DXY, you know, so they could come down a little bit more and allow our risk on assets to kind of perform for a little bit longer. So we might see the SPY and the NASDAQ continue to push up a little bit higher. We're seeing the 10-year come down, so this is good. Still at elevated levels, but it is nice to see we are somewhat breaking down from these patterns here, similar to what we saw in all of these prior moves. So starting to break down, we want to see this continuing to come down to give that liquidity the relief, and then hopefully we start to see more liquidity coming back into the markets. But right now, you know, bonds are still remain elevated, so there's still that uncertainty, that risk in the market. You know, I don't think that that's just disappeared. While we do have some advancements in regards to trade talks, we've got de-escalation when it comes to the Israel and Iran war. That being said, you know, anything can change. These aren't really permanent trade deals, lots of them. So we see Canada, basically trade talks reset because Canada came back and hit them with a digital services tax. So these trade talks, these tariffs, they're still ongoing. It's not going to resolve itself overnight. We still don't even know the actual specifics of the China-US trade deal that they've been talking about. So we'll just have to kind of keep following that. But taking a look at the VIX getting a little bit of a bounce here today. Again, watch for that VIX to really start breaking up towards this region here. Generally speaking, that is a very volatile time in the market, and sometimes can signal, if we're looking at a bit of a bearish setup and rising volatility in our stock markets, then that could signal a downside. Or if we get that bullish setup with a major surge in volatility, we could see things move to the upside as well. So we need to pay attention to the volatility. We need to pay attention to the dollar. But taking a look at the SPY here, we see we've put in new all-time highs. So we've broken out back above this resistance. So what I want to see, we're still pretty extended. When you look this on a weekly basis, we have a weekly gap fill right here at about 570 to 575. So I think that is going to be a decent target. You know, I don't think things go up straight forever, and we do see that we are still extended on a Fibonacci basis. You might look to start that entry here on kind of a bigger scale in this weekly gap fill, and then dynamically DCAing down into that Fibonacci golden zone. That's probably what I'm going to look to do. We'll take a look at some of our indicators here on the weekly. So we'll take a look at our directional movement index, the vortex indicator, our RSI, and our MACD, the same four that we always watch. And we see the bullish trend here taking control on the vortex. We're seeing the bearish trend here really diminishing. So when you see this orange line, that's the negative line. When it starts to cross below that ADX line, that tells me the bearish trend is losing that momentum. The bullish trend is starting to pick up some momentum as well, and that's what we saw here. And then same thing coming to that oversold RSI and MACD territory. So looking for oversold, overbought conditions, looking for good value here. So we came down strong support levels from the previous all-time highs over here. So that was a very good opportunity to add to your positions. Let's flip over to the NASDAQ. It's going to look a little bit similar here. Also at new all-time highs, and same thing. We've got the bullish trend very dominant right now in terms of the weekly structure. We'll take a look at the IWM. Russell Shares 2000, the rest of the market. So this is interesting. Whereas the SPY and the NASDAQ have already broken past their all-time highs, the IWM is still down 12% from its highs. So it's still lagging in regards to the overall market, which tells me, again, all of the majority of the buying that happened in this correction here in the SPY and the NASDAQ, a lot of that liquidity was really focused into a handful of names, that Mag 7. And so those are the stocks that really have kind of propped up the SPY and the NASDAQ over kind of recent times. So interesting to still see, while we are looking pretty good from an indicator standpoint on the higher time frame, we are lagging that SPY and the NASDAQ move when it comes to the IWM. So we need to continue watching that. So we want to see the whole economy kind of doing well and really performing well, not just a select few favorite names, especially when a lot of these favorites are retail favorites. The Mag 7 is a retail favorite trade, and essentially, we do kind of recognize that retail investors and traders lots of the times don't necessarily make the best decisions in the right mindsets. So we need to pay attention to that. We want to kind of think like the smart money and invest like the smart money. We don't want to think and invest like retail, because that's very emotional. You're kind of just throwing darts at the dartboard. So we're going to continue following this. We've seen a pretty major influx of retail come in on this market correction. What I'm a little worried about is potentially, we've broken out past the all-time highs on the SPY. If we just get things to push a little bit higher and we start to lure in more retail that maybe sold up here previously, or they sold, they were scared that we were going to go into a recession during this drop. They capitulated. They didn't buy in down here, and now they're just waiting. They're going to wait, and then by the time we've broken out above these all-time highs, they're going to look to get back into the market, potentially above where they exited. So that's generally when the market does the opposite of what you want it to do, and it just comes back down, retests these support levels. I'm waiting for this retest. So if we don't get this retest and we continue just moving straight up and to the right, which I think is very unlikely on a longer time period, then I'm okay with the exposure I have. There's still going to be opportunities in individual asset classes. Just because we've missed the entry on the SPY index doesn't mean that we've missed every entry when it comes to stocks. So that's why I say I never worry about missing something or chasing something, because there's always going to be another opportunity. And when we kind of look back at history here, so we take a look at the SPY, I just kind of want to show you a couple things here. Is here in COVID, essentially, we had this V-shaped recovery, but we still had kind of this consolidation pattern that allowed multiple opportunities to enter after we got back above the all-time high resistance. So same thing that we saw here, V-shaped recovery. We're just poking back above our all-time high resistance, similar to what we did over here. And look, we came back and we held that higher low, holding this support zone. So for me, rather than buying right now, you run the risk of buying into resistance. The market does this, sends us back down to support. Maybe you get scared, you capitulate on the drop, and then the market ultimately does the opposite again and just punishes you. So we don't buy resistance. We wait for the breakout and retest of support. There's always less risk when you wait for that. That's called waiting for confirmation. So that's kind of the update we got here to the SPY, the NASDAQ, and the IWM. We'll take a quick look at TLT here just to kind of see. So still in that downtrending price action, lower lows, lower highs. If we come back within this green region here, I may look to rebuild my TLT position. That's a hedged position. I've talked about that prior. I'm looking at gold here. Gold still just consolidating right near its all-time highs. We can see it's just managing to hold this upsloping trend line for now. Tried to break out right here, but wasn't really able to. So gold for now is kind of in, again, that lower time frame downtrend. You know, not really surprising to see, considering that we are getting relief in the SPY, the NASDAQ, and Bitcoin. Silver flat on the day here. Oil back to kind of $65. We had a big pump up on the Israel-Iran conflict and a big dump back down, and we're bear flagging right now. So we could probably come back. You know, we might even retag these lows down here. Under $60 a barrel for oil could be that potential. So just paying attention to that. Looking at the Swiss franc breaking out against the US dollar again, still holding these all-time highs. Japanese yen also performing very well. This is that bull flag structure. So again, foreign currencies, alternate reserve currencies are continuing to show strength against the US dollar. That's something to keep in mind. Just tells you that investors are seeking to kind of looking for that relative safety outside of the US dollar. And we've really seen that since Trump got into office, essentially. It was right 2025, January, that's when things started pumping when it came to the Swiss franc and the Japanese yen. And again, I think there was just a bit of loss of confidence in the US dollar. We're going to flip over. We're going to take a look at some stocks. I want to talk about a few that I do have positions in or that I've recently bought. So Google is one. Google, you know, obviously one of the biggest companies in the world. I don't think they're going anywhere. They've got their hands and fingers in a lot of different revenue streams. They have been lagging kind of the broad market, and at $175 a share, I was kind of happy just adding to my position here. We've been riding this trend line. When we take a look at the higher time frame, I'll find some levels where I'm interested in kind of dynamically DCAing, but when it comes to Google, you know, I don't mind it at the current price, so I just added to my position. I do think they're lagging the market a little bit here, and not for a very good reason. But when we look at the Fibonacci's, we can see our 786 here at 114 and our 618 at 135. So basically, I already have exposure to Google on a long-term time frame, so I've added to that position, you know, around 175. But the next dynamic DCA that I'm looking at is potentially playing this Fibonacci zone in through here. So if we go under 150 down to about 115, that's going to be my range to dynamically DCA into Google and look to add to that position. We've got Zeta here. Zeta we got in sub $15. I talked about this a couple times, and we're already getting a nice little bounce out of here. So look at this move. Nice little catch there. We kind of recognized this stock that was trending. We liked the technical setup. We took a look at the fundamental valuation, and we did like it as well. So we pretty much took this trade. And we see, you know, rocketing up here to $18. Coming back, we took our entry here around there. So I got in at about $14.75. Not quite tagging the lows, and also not quite tagging my initial planned entry. So that's what I talk about, having that margin of error. And even if I have this set up and then I decide that I'm going to take the trade, I will update you guys on Telegram to maintain that transparency. But we're sitting at that buy from $14.75. So when we look at that, we're looking like we've got about a almost 10% move right now to the upside. We are basically halfway through our target to the TP up here. So if you were looking at this on a short-term trade basis, you could put your stop loss up to entry. You know, we can see here, if this breaks back below these lows, we've lost the uptrending price action, and we are likely to come back and retest lower support down here. So it might make sense to have that stop loss at entry, and then it's just a risk-free trade. So we've opened some Zeta, we bought some, we bought some Google. I also bought some of these treasury companies. So there's a couple different treasury companies. We got a very small position in this CCCM. Look at this chart, basically rocketed up, massive bleed, back to support, completely filling this gap. This company is going to buy $750 million worth of Bitcoin, and it's headed by Anthony Pompliano. I don't love investing based on personalities or hype, but for the valuation of the company at the time, I think I paid about just under $500 million market cap, and they've essentially raised $750 million to buy Bitcoin. They're going to go in a $1 billion merger, and Anthony Pompliano actually has a lot of connections when it comes to some major investors. He sits on the board of Hut 8 Mining, so interesting little connection there, and it's just a speculative bet for me. So I'm not putting a ton of money into this. I'm only putting in what I'm comfortable losing, and I'm using profits from other trades to fund this one. So it's still technically risk-free in my opinion, but CCCM, that is one I've bought. I've bought a little bit of a position. I kind of averaged about $10.70, so right around the current price. And then SBET, this is an Ethereum treasury company. They essentially are the largest public holder of Ethereum. They stake all of their Ethereum, so they're basically holding the asset, and they're also earning yield on the asset from staking it. So again, this is another one we saw a massive run up and then completely sold off back down here, back down to where the NAV premium, so the net asset value premium, actually made more sense. So I don't like paying massive premiums for treasury companies, especially when things pump like this. So you would have had to be kind of a genius to catch this move, honestly. We saw this pump up 300% super fast and ultimately sell off all the way back down here. So I've got a small bet in SBET as an Ethereum treasury company. That's kind of to capture some potential rotation into the Ethereum trade. And then I've got the CCCM. I picked up a couple call options on Wolf as well as Cypher. So I've got a few call options on Wolf and Cypher, dated into January 2026. I did take some profits. So Irene has been pumping. It's currently at $14.50. I had some $15 calls. I exercised those. I wanted to take the profits. They were up almost 1,000% in the last few months. So taking those profits off the table, I'm still holding $20 calls for Irene going into January 2026, just for reference. But, kind of looking at the Bitcoin miners, we are seeing some value here. Hive still looks really undervalued, but we're seeing a lot of capital focus on the AI hybrid miners, especially because Core Scientific has just been rumored to be, potentially they're going to be bought out by CoreWeave, my mistake. CoreWeave, another position that we have, but this was that massive gap up. Look at this move here from even this candle here. So somebody knew the news right there. That's a 45% move for Core Scientific on simply the rumors of another attempted buyout by CoreWeave. So what do we have for other AI hybrid miners? Definitely have Cypher, we've got Iris Energy, we've got Hut. We do have Hive, but I think they're less likely to land a large hyperscaler deal. And we've got BT, also less likely to land that large hyperscaler deal. I think the most likely ones are going to be Galaxy, GLXY. CoreWeave actually has a contract with Galaxy, so if we see them do the same thing they did with Core Scientific, we could see them try and actually acquire a more meaningful stake in Galaxy. Other contenders, like I said, Wolf, Iron, Hut, and Cypher. Keep an eye on those ones. Keep an eye on the AI hybrid miners. They've really been kind of capturing a lot of the hype, and for good reason. There's a lot of money in this, and these data center operators, they just need the most efficient, most profitable, and the largest scale of data centers they can find. And at the current valuations, the Bitcoin miners offer some of the best opportunities in the space, in my personal opinion. So that's kind of my broad update, covering some stocks, covering some of the macro stuff. We'll get more into Bitcoin and crypto later this week, but that's it for the macro update today, guys. Thank you so much for watching, and I'll see you in the next one.